and welcome to On the Record with me, Shireen Bhan. Joining me today is a guest who's decided to make a move from Mumbai to Kerala to head Federal Bank, and he's now put out his strategy for growth as far as Federal Bank is concerned, Breakthrough 4.0. Joining me to talk about that in his first interview after taking over as MD and CEO is KVS Manian. Mr. Manian, many thanks for joining us here on CNBC-TV18. It's an absolute pleasure to have you join us. I know you like to run marathons, but it's a pretty long one, right? From Mumbai to Kerala. What made you want to do this?
Thank you, Shireen, for having me here. Pleasure to be here today. Yes, going back to Kerala is, as you might know, I have roots in Kerala. My parents were from Palghat in Kerala. We are Tamil-speaking Keralites. Though I had never lived there, my parents had moved to North, Bombay and Delhi. But it's like going back to the roots in some ways. And now this decision, of course, was a very tough decision. Yes, in some ways, very easy decision as well. Tough decision because, you know, my earlier employment, I was there for almost 30 years.
Yes.
And been part of that growth story, built several businesses, had fantastic relationships, learned a lot. Everything that I am today was from there. So it was a difficult decision to do that. But yet, I think wanting to run your own ship, captain of your own ship.
Captain of your own ship made the choice easier?
That was the easier, that is what made it easy, I think. And the opportunity itself of Federal Bank, you know, very well poised, great journey. You know, pulled out of the pack of old private sector banks, clearly leagues ahead. Just the breakthrough into the top league is possible. That story excited me, and I am, you know, I am a kind of person who needs to come to work every day with a spring in my step, wanting to do new stuff. And I thought this was a very exciting opportunity.
Well, you know, speaking of the exciting opportunity and the breakthrough, you know, you're no stranger to working with tall personalities, whether it's Uday Kotak or, of course, the man that you took over from Shyam Srinivasan. And you take over a bank that had its best performance in 2024. So in that sense, you're coming in at the right time for the bank, but perhaps a more challenging time as far as the industry is concerned. Mr. Kotak says that, you know, the Goldilocks period for India's financial services sector is perhaps behind us. So as you talk about breakthrough, you know, how worried would you be about the external environment?
Yeah, so in some sense, the environment, downward interest rate cycle is always not so great for banks, right? Because especially after the regulatory requirement to benchmark many of your loans to repo, it's always a more challenging environment. But I do see the credit environment that we saw in the last 1 year improving as well, right? Hopefully, in a quarter or two, we see the end of that poor credit cycle on unsecured loans and things like that. So there is some positive, some negative, but yes, there are some headwinds for the sector. I understand that. Having said that, you know, I'll put it in two ways. One, banks with Federal is a 1.3% market share bank, right? To some extent, I think we have to rest market share and grow and not be worried about, the biggies have to worry about the secular growth of the sector and their share in it, and therefore they can't gain share. So their growth becomes almost correlated to the sectoral growth. I think the smaller players have other levers to pull to grow. And I'm confident we have identified those levers and we'll be able to grow. That is number one. Second, I also see, you know, this is a bank which is work in progress. I think great amount of work done in the last, my predecessor Shyam has done a fantastic job over the last 14 years that he spent here, brought it to a stage. But yet there is unfinished agenda, as it is natural, right? There is unfinished agenda, and we've been able to identify that unfinished agenda. And I think those can be used as lever for growth. And the last but not the least, you know, for any new CEO, when you come in, you first start wondering whether you have the right team and therefore whether you can push growth. That is one thing that I don't have to worry about. I think the team is, of course, there are some gaps in talents which we'll have to fill at the margin, but the core team, I think I'm very confident the team is very good, and it helps me hit the road running with the kind of team that I inherit.
Well, let's talk about hitting the road running then, and the focus areas that you've identified as part of your growth strategy, Breakthrough 4.0. And you've probably also seen, as I have, the analyst reports that have come in after your analyst meeting. And while everyone agrees with the direction that you are taking as far as growing the bank is concerned, there are questions and some concerns on the execution challenge and whether the targets that have been set, for instance, on return on assets and so on and so forth, are too ambitious and doable. How do you respond to that?
So, Shirin, in fact, I clarified in my presentation there that those exact numbers are not important, right? The direction is important, one. Two, if there is a sectoral deflation or inflation of those matrices, obviously the point we were making is there is best three and next three, and we should lie somewhere in the middle of that pack. The parameters by themselves may change a bit here and there, but the idea is to lie in the middle of that pack, and that's the ambition. Just now, on some parameters, we may already be somewhere in the middle.
Right.
On some, we are behind. So the idea is to catch up with that. So that is one. So just to clarify, the absolute numbers are important, but you have to see it in a context. Yeah, they are not set in stone, and you have to see it in the context of the industry overall. Second, like I mentioned earlier, that yes, there is an aspiration built into it, some stretch built into it, yes. But I think the vision needs some stretch, and I am sure that team I have owns it. All the stakeholders that I have discussed the plan with are keen that we put some amount of stretch in the plan and go for it. And the confidence that the team will measure up to it is what is driving us.
So let's talk about the stretch that you speak of, and you said that people are on board with stretching yourself. The question that analysts are asking is, what will this stretch entail in terms of OPEX, for instance? I mean, how much do you intend to stretch yourself on that front? Right. Investments. Right.
So, we are not a bank which has a very comfortable cost to income ratio, as you know. I mean, we are at about 52-53%, and I would say I have relatively low wiggle room on stretching that too much. So therefore, we'll have to follow a strategy where we grow our revenues and put on costs in tandem. We'll have to pace them reasonably equally, right? I can't just put all costs in advance because, like I said, 53, I can't stretch it too much. So, and I do think there are levers that we can use to push our revenues as we add on costs. And of course, to some extent, this is a 3-year plan, and we will pace ourselves in a manner that we keep control of our parameters and do not run away with too much investments in the beginning in the hope of getting revenues. We will balance ourselves.
Well, yes, so more restrained in terms of the kind of spends that you envisage.
Yes.
But if return on metrics is one of the aspects that you're focusing on as far as this plan is concerned, let's talk about some of the levers that you intend to exercise and talk to me about what you intend to prioritize. One, of course, is the aspiration of becoming a universal bank.
Right.
When you talk about expanding the franchise, for instance,
right.
What can we expect in the next 3 years realistically? You talk about 400 to 450 branches being added on. That's more than you've done in the decade gone by for Federal Bank.
Right.
So, prioritize for us what you intend to focus on.
Right. There is core part of the business and there is the universal bank ambition, right? So obviously core part of the business gets priority over the universal bank ambition. So in terms of prioritizing, that is one kind of prioritization. Second type of prioritization is, like you said, about the growth in branches. Obviously, we are not going to do in the first year out of the 400, 450, we will pace that slightly relatively more back-ended than front-loaded, right? We don't want to, for the reasons I already told you, that I don't want to change the cost to income dramatically initially. So I also feel that there are enough levers. For example, I have talked about it in my strategy. Our current account business, I would say if you take our CASA ratio, the broad breakup is 24-6, right? 24% SA and 6% KA. I would say
you're making it sound almost musical now.
The 24% SA is not is fairly in the right zone vis-a-vis the peers, right? More or less, give and take here and there. The 6 of KA is where our difference is, and that's the opportunity. Even within our given network, our SA can be higher without any further investment. Just doing better focused work, we can get outcomes on that. So there are areas like that where we will prioritize to get, juice the network more, to get some higher profitability products like car is something that we can do without adding costs. So obviously, therefore, that is higher priority. So I would say even in core, our priority will be to attack opportunities like that. For example, we are in the car business.
Right.
Can we do used car business along with that? We can. It doesn't require much investment, right? It requires just the focus to get it done. You have a base which you have done business with. Can you do that? It increases our yields and it increases our returns. It gives us more leg room, wiggle room for taking costs. So there are areas which are clearly identified in that plan, if you look at, which do not necessarily need investments. Yes, branches do need investments, but there are lots of areas which we'll focus on to make sure that we create more revenues as we go along and then incur the costs in parallel.
You know, speaking of creating more revenue opportunities as well as new lines of business for the bank. Now again, plenty that's been highlighted there as potential opportunities that you're willing to look at. But will it be, if I were to ask you, will it be buy versus build? What makes strategic sense to you at this point in time?
So I would say it's a mix of the two. In the core areas, I think it will be relatively more continue to build because there we have the skills, we have the distribution, we can still build without having to buy. There are areas where talent is required. Those are areas where I would say somewhere in the middle, build or buy. And there are areas where clearly which are outside the core strength of the bank. Let's say we talked about the universal bank area. Let's say if we have to think about as a universal bank in terms of brokerage or AMCs, these are completely different skill areas. So yeah, so there will be.
So that's likely to be the area where you consider inorganic opportunity.
Yeah, having said that, inorganic is my later priority. I would initially build core areas, get the bank on a stronger footing, create a better currency of the bank, and then look at inorganic. But yes, in principle, what you're saying is right. Yeah.
So, you know, if you were to look at the margin roadmap that you've laid out for us, and you kept talking about how you intend to juice out existing parts of the business, you know, what's the expectation then, given also the external environment as well as what you have the ability to do and re-engineer within the business?
Yeah, so you know, like we said initially, if the industry goes through a slight margin compression, we won't be completely insulated from that, right? We also have a floating rate book, and it will have some impact on that. The idea is to, of course, that downward impact has to be buffered by things we do, which will increase. So therefore, can we fall lesser than otherwise we would have fallen, right? So, and like I said earlier, look at benchmarking yourself in the middle of the pack. As long as we achieve that or are in a direction to achieve that, I think we are doing good.
You know, what are the indications and the signs that you're getting as far as the economy is concerned? Private capex, for instance, and this is something that we've been talking about ad nauseum, and whether we're finally at the cusp of seeing it lift off or take off, so to speak, or it continues to sort of be the green shoots that everybody's looking at. What's your own sense of what's going on there?
Yeah, so I don't have much more sense than what many of you must have already read this, right? So the credit growth, if it really has to get to the levels that say 13, 14, 15%, I think the corporate has to move out of the single digits, right? Today, corporate growth is in single digits, right? Credit growth, corporate credit growth. So I do think that you need that to kick in before the credit growth numbers can look healthy. Having said that, if you ask me, do I have a better sense than you have? Not really. I do think that we are at the cusp of it. I do think there are enough noises around the possibility that it might turn around in the next 2-3 quarters. All I can do is hope that that is true.
Well, yes, I think a lot of people are hoping that moment we're finally at it. But since we're talking about disruption, we're also talking about growth and new opportunities. We're also in an era where technology is outpacing everything else at this point in time. AI and now quantum. Yes. So, from a bank's perspective, how do you use that to not just disrupt your own business, but also ensure that you can use that from a cost efficiency point of view, a new customer acquisition point of view? How critical an ingredient is that going to be for your growth plans?
Yeah. Now you can't take tech and bank away from each other, right?
It's the same.
Tech and tech is the bank. Yeah. Now, so
bank tech.
Yeah. So you can't talk of banking business without talking about technology. So having said that, if you see my broad vision on that is that technology, while customer is one part of the where you have to use technology for customer convenience. The other part of technology is on employee enablement, right? And I want to kind of find a right balance between the two, because it is very important. While of course there are lots of businesses where it gets self-serve model and customers have to self-serve themselves or using technology. I think that there is usually not enough attention on the employee enablement side. So I want to put the right balance to this. And in fact, interestingly, you might know that Federal has a saying that rishta aap se hai, sirf app se nahi. So that kind of tells us something. One of the core things about the Federal brand is clearly the service element and the human relationship element. I think they've been outstanding at it over decades of doing that. So it's an important part of the business. Of course, it has to be supplemented by good technology. And my sense of the technology, status of technology is, I think we are good for the present. It's reasonably resilient. It is reasonably robust. It delivers what the customer wants. Our app is reasonably well rated. Having said that, is there work to do for future proofing it? There is. I think we need to, both from future architecture and things like that, on which we have started some work. Also, as we look at new products and new propositions and new elements, like we talked about corporate bank, digital platform for corporate banking, we are talking of wealth platforms. These are elements in the bank that did not exist, and therefore they have to be done, right? The technology part of that has to be done. So I would say work to be done, but I am quite sanguine that given our past track record on how we have handled technology, we can. Most of the tech businesses, if you take the tech businesses and look at how they spend their capital or how they large part of money they spend is not as much necessarily on technology as on customer acquisition. Customer acquisition is probably the higher cost element in most of those businesses than the technology itself. And that is where this is important, right? Technology we can do, but the fact is we have an existing base. Take an example. We have a non-resident base. It's a moat that the bank has built over several years, and it's probably one of the biggest brands for non-residents in India. So we do business with them, but our business is highly focused on the deposit side of the business, right? It has relatively less focus on the wealth side of the business. These are customers who are very loyal to us. Sometimes second, third generation of those customers are banking with us. If we make an offer to them on the wealth side, I'm sure we have their trust that they will buy those products from us. So I think having a base and therefore not incurring costs for acquiring new customers is a very big advantage, and we must leverage that. So that's the
so if you believe that is the right to win, at least as far as that core constituency for you is concerned.
Yes.
So would you be prioritizing then the wealth product
Absolutely.
offerings, etc., and how soon can we expect that?
Absolutely, you'll see that that will be one of the first few things we'll do. It's an area where we need to add some skill elements in the into the pot, but we will soon.
Okay,
Yeah.
Since you talked about rishta, and it's very evident that it's a very solid rishta, at least in the home state of Kerala, market share of 18 to 20%.
Yes.
Now, obviously, no one's expecting you to be able to replicate that in the next 10 markets that you
Yes.
intend to focus on. But what are the learnings, key learnings that you intend to export from Kerala as you chase after these other 10 markets that you're going after?
There are several learnings. I mean, if you see, one of the very distinctive features and a very, very positive surprise for me, I knew from outside it was the case, but once you get into it, you really understand. Our attrition rates on employees, annual attrition rates are something similar to people's monthly attrition rates in other banks, right? It's a huge strength. If we use it well, I think it can be a huge advantage in terms of stability of the bank, in terms of what we can achieve in terms of productivity, in terms of relationship with customers. It's a big advantage. So that's one thing that if we can replicate even slightly worse than this, but much better than the industry, if we can replicate that, that's a big advantage. And I am a great believer in good teams always. So that is one thing we can definitely learn. Second, and a very, very important thing, I think the service quotient, service focus is phenomenal. I think whether it comes because of the state's innate quality of the home state, I don't know, but it's a huge, the focus on service and focus on rishta and service is so high that if we can replicate that, it can be a differentiating factor in the rest of the country as well. Third, having built such a strong brand in Kerala, I'm very sure that the adjacent states, there is advantage of that brand visibility in the adjacent states. At least the adjacent states know the brand well. So I think growing outward from that state into adjacent states and then beyond is something that will help us. You might be, you might not know, but Federal Bank several years back bought Ganesh Bank of Khurdwad in Maharashtra. So even Maharashtra is somewhat like a home state for a part of the bank. So again, long branches who have been present for long, people who have been present there for long. So I think some of these are really strong basis from where you can build out. And I am quite optimistic that if we can replicate these 3-4 elements, service, the rishta, the attrition rates, these are very strong positives in my
So how soon, you said you're hitting the ground running, in terms of southern expansion and then of course the state of Maharashtra as well, how soon can we expect you taking aggressive steps?
So I don't know whether I should call them aggressive,
Okay.
But we are very clear. Phase 1 of the plan is Tamil Nadu, Maharashtra. You will see the expansion, far deeper expansion in these two states first. And as I said, we will keep rolling out to Karnataka, Andhra, Telangana, and then to the other states going forward. We also have a good moat built over years in Northeast, by the way. So, so there are some advantages in some other parts of the country as well. So you will see the plan rolling out right from next year.
So 3 decades as a banker, and you said that who you are today and what you are today to a large extent has been shaped at your earlier stint at Kotak Mahindra Bank. I want to understand from you, what have been the big lessons that you've helped shape who you are today from Uday Kotak, and also as you look at Federal Bank from Shyam Srinivasan?
So, I worked with Uday, like I said, for 30 years close to. I think clearly I have always found one thing that doing business ethically and correctly, I mean, it's better to do, take slightly longer but do things right is one thing that I have learned. Conservatism is another one that in this business I have learned from him. So those are there. And with Shyam, I think people, I think if Shyam has, I mean, like I said, bank is in good shape, but one good thing he has done is left me a good team, and I think That's what I would say from Shyam.
So what would you regard as your biggest challenge today as you look at rolling out across, of course, phases, the breakthrough plan? What would you regard as the #1 challenge?
Execution. I think execution has to be, any plan is only
as good as the execution.
As good as the execution.
What do you see as the possible stumbling blocks on execution specifically?
It's not that I see stumbling blocks, but yes, there is, like I said, there is a stretch and aspiration built into it. I think we need to do that. And therefore, though I'm confident that the team will stretch and do it, we still have to do it, right? Proof of the pudding is in eating it.
Yes.
And therefore, I would say, if I have to keep one thing in mind, is to ensure that the execution remains on track. Because that means a lot to me, to the bank, to my people, all of that. And I think that is what we have to keep track of. A suboptimal strategy, but a great execution is much better, produces much better outcome. And that's what we will remain focused.
You know, as someone who has to deal not just with what's happening in the banking space, but a lot of what else happens around you, the external environment that could potentially impact sentiment and of course impact the banking sector. How do you balance the external noise while staying focused on what you need to get done? You know, how do you find that balance between external and internal?
I'm not much of a meditator. But
running meditation for you?
I was coming to that. But it's like some of the things, music and running are two things that,
what kind of music?
What kind is old Hindi film songs and ghazals are my favorites.
Okay.
Ghazals I hear everybody.
Is there a current favorite that is an affirmation of strategy or how you're feeling about life in general currently?
No, nothing like that particularly now. But having said that, some of these things de-stress me, and it's very important. I think both my mental and physical energy is important to drive a team of this size, and therefore I take particular care that I of course make sure that my physical fitness remains good. I haven't been running off late, but I intend getting back to the track. But I do my workouts. I make sure that I do that regularly, and music is of course. And I have a set of friends, my college band friends. We just
jam.
Do
you sing?
Yes.
Really? So I'm going to ask that.
Don't ask me to sing on this program.
I am going to ask you to leave us with one verse of your favorite song, whatever it is.
No, my all-time favorite is of course this song, "Aapke Haseen Rukh Pe Aaj Naya Noor Hai." It is a Mohammed Rafi song, O.P. Nayyar music, and it is picturized on Dharmendra. It's an all-time favorite that I have.
It may not be Dharmendra, but Mr. Manian, come on, give it a shot.
No, I'm not doing that on this show.
But Mumbai or Kochi?
Very interesting. I hope I'll have best of both worlds. Kochi is going to be coming. I think I intend spending 50% of my time at least in Kochi in the sense Alua head office, and I think I can have the best of both worlds. Bombay is required as any financial sector person. You cannot not connect with Bombay. So, and of course I have spent 40 plus years in Bombay, but I think one, there is a large team out there in Kerala. So I would like to spend time there. Second, I think Kerala can be interesting. It can be an interesting place to live, at least from whatever I have seen in the last 4 months. It's a good place to live. So maybe quality of life will be quite good in Kerala. So I intend making the best use of both.
The top 5, which is the aspiration, doable in the next 4 years?
Absolutely. 3 to 5 years is the time frame that one should overall look at. Absolutely doable. I am really excited that the place where the bank is currently and where I want to take it, I think it is very well doable. And of course, like I said, proof of the pudding is in eating it. We will see.
We will see, and we will hopefully get the opportunity to speak with you as and when that happens. But we wish you the very best of luck with Federal Bank and the strategy that you've unveiled for charting out new territories for growth and new opportunities that will take the bank to that position that you've just laid out for us. Appreciate your time. And once again, thank you very much
Thank
for
you,
joining
Shireen.
us.
Thank you for having me here. It was a pleasure talking to you.
Pleasure
as
speaking
always.
with you.
Thank you so much for
Thank you very much. Well, with that, it is time for us to wrap up this edition of On the Record. From all of us here on the team for now, goodbye and many thanks for watching.